You yourselves have pointed out that we have broken through some technical levels on the downside. Should we be bearish on Bitcoin from here, given that we've seen those technical levels come and go?
Well, Bitcoin and most altcoins have been trending lower for some time now. In fact, Bitcoin peaked in November of last year. So it's really nothing new. It's just the magnitude of the decline has been so severe, down about 44%, I believe, month to date. And that obviously is a bit shocking in terms of downside momentum. And it, of course, has carried over to altcoins and really just infected the entire space. Now, with this kind of decline, of course, support levels are being taken out. And our last support level was broken decisively enough that we're already to the next support level. And these are long-term levels. For Bitcoin, we're watching about 18,300 to 19,500. That range is based on a Fibonacci retracement level, something that a lot of FX traders like to track. And then also a previous peak on the chart, so a more traditional way of deriving support. So that's the key level in play here. It's a very natural place to see some stabilization and kind of relief rally. We do think that relief rally would be muted, however, just given the downside momentum really across the board.
Do we see a little decoupling from how equities trade from now on then? Because it certainly seems like equities might be staging a little bit of a reversal next week.
Well, I think equities also will see a little respite this week from the downside momentum that they've been plagued by. So I think we'll see collective sort of relief this week, or maybe even for the next couple of weeks. But I would assume that beyond that, the downtrends will keep hold and that the correlations will stay very high, maybe not as high as they have been, because they have been really unusually high between, especially the NASDAQ 100 and Bitcoin in particular, but very high. And that's very normal when you have a downtrend tape and you have just this general risk off fear in the marketplace. So investors are treating Bitcoin, Ether, and equities like risk assets, and they should do it that way, especially when they're trending lower like this.
Katie, what does it tell us about the long-term outlook and, I guess, reconfiguration of this entire asset class?
Well, I mean, with almost 75% downside from that November high for Bitcoin, I think it's really shaken out a lot of the weaker holders of the cryptocurrency market. We have seen Bitcoin outperform other altcoins, and with that, that means we're seeing it act as a bit of a safe haven. But when your safe haven can be down that much, it's really shaken out some investors and certainly has shaken out some traders. So it feels like, to me, people are having to press the reset button and to live through this kind of down cycle in a lot of, or sort of early investing careers for the cryptocurrency investors. I think this is going to change the way they look at the market going forward, but I don't think it's going to shake them out indefinitely. I think it's a matter of watching for momentum to shift, to get that kind of basing phase in place, and that's where confidence will be restored. So I think it's a bit of a shakeout, and probably a shakeout, as you could imagine, in fundamental terms as well, where the weaker companies just aren't going to survive. But after we come out of this, then there'll be some great opportunities, and perhaps the opportunities will have a little bit more longevity, and maybe with that a little bit less volatility, which is natural as an asset class matures.
So if you see it as more of a consolidated class of investors and more of a consolidated, smaller industry of bigger players, is that where we're headed, given that it seems like a lot of the bigger crypto players are chasing liquidations at the moment to try and profit from the volatility?
It's hard to say what the composure of the sort of investment landscape will be going forward. It's been my belief that we'll see institutional interest grow over time. But I think what will be required before that really happens is a relief from this kind of volatility. And as you've seen, equities are in a high volatility regime as well, and that's shaken investor confidence reasonably so. We have sentiment data near its lows, and yet we don't have any indications that even the high growth arena, which is so deeply oversold by some metrics, is ready to rally and ready to move forward in kind of that regular stair-stepping fashion that generates that institutional interest. So I think it's delayed that institutional buy-in, but that eventually it will be there once these other companies that don't pass muster from a fundamental perspective are shaken out of the industry.
Katie, it would be remiss not to mention that given that it's Juneteenth, you know, a lot of minorities are actually going to be hurt by this this drop in Bitcoin, a fair fraction, more than 40% of Black Americans, for example, are involved in crypto in some way. What would be the advice for the retail investor that has a certain portion of their assets in crypto universe?
I think it depends. It's really very personal, of course, in terms of where did they enter the market? Have they ridden it lower at this point? But I would say there's nothing wrong with being on the sidelines and waiting for a market to build that base. After such a prolonged downtrend, markets do tend to not bottom in that kind of V bottom fashion, but rather need to go sideways for a bit. So rather than waiting for that and just letting your money do nothing for you, I would say better to be on the sidelines, let these downtrends give way to basing phases, and consider alternative asset classes.
Thank you.